Good morning, everybody. It is Thursday, October 30, just coming on 4 a.m., and I got a little bit of energy, so I wanted to be able to put this together to discuss one item and one item only. And I apologize if I do start coughing, because I'll bring it to you here, right? It's 2004. Elongate and I, living in Spain. We head over to Ibiza. We're partying our asses off. We leave the club at around 11 o'clock in the morning. We've been there all night, rolling our asses off on ecstasy. And as we leave the club, three Brits kicked the living shit out of us. I mean, just kicked the shit out of us. I had broken ribs, fucking all of it. This pain that I feel now from the coughing I've been doing from this flu is equal to, actually, I'll use Donald Trump. On a scale of 1 to 10, it's a 12. I mean, just insane. And the thing is we've got family spread all over the country. 7,700 islands. They have the flu in all different parts of the country. So, luckily, it's a throat flu, strictly in the throat. But I tried, I really did want to get out there and get on live stream for the FOMC yesterday. I didn't have it. Apologies, I didn't have it. So, what I want to bring you on to here and discuss is the October monthly candle. And I've been parading this since the beginning of the month. I've been doing the exact same thing that I did last year in October. The hunt for red October. We're getting a red month. We're getting a red month. We're getting a red month. And then this week, we get fucking open AI'd. Open AI'd from Friday, and then again on Monday. And I mean, what do you do? What the fuck do you do when, you know, you're getting this rotating funds of one bag of money that's going to 10 different companies, and they're all reporting it as revenue? What do you do? You know, so here we are. We're up here in the very high 6,800s as of the close yesterday. We did not come down into the weekly candle on the FOMC low, which was slightly disturbing. But here we are. So anyway, bringing you back onto this. The date of this, I don't recall, but obviously there were 10 days left in the month when this one went out. The October candle, 66.64, 66.92. You can get $4 for every visit that we're getting above 6,700. Looking for a close below 66.65. Earlier in the month, had them out there. We got our dip down to 65.50. That was due to be the beginning of what was due to be the bullish wave 4 to bring us down to around 63.80 to then make our final move to the upside to conclude this wave that began back in April into the beginning of next year, as we've been discussing for months. Months we've been talking about it. Wasn't talking about it in March when I was saying new all-time highs are coming before we bottomed in April, but that was what we had been looking for, was that clean, buyable dip to be able to get that final run into November, December. Then it's a question, beginning of January or more likely the beginning of February. So again, these were back to $3. The October 31, 66.70, 66.65s. And then this week, because of the bullshit that happened over the weekend, I said, forget about 665. Use the gap. You can get the October 31, 6805, 6800 calls. You're getting $350, $4 credit. Now, I know, I'm not a fucking idiot. I know it's nothing but $4 or better. But here we are, right? Here we are, right up here at 6875, 6890, 6890. So here's what's different, all right? Here's what's different. We've been getting consecutive gap ups for the better part of 2 weeks. We were getting consecutive gap ups all in the beginning of the month, even though we had that big minus 182 point day back in middle portion of October, October 10th, which took us down to that 65.51. That was due to be our beginning, and then our bounce, and then our next leg down. Well, we didn't get it. It's like they say, bull markets surprise, bear markets disappoint. So what we're looking at here is a third green week in a row, closing above 68.45.46. Used to be that was your limit. When you got 3 green weeks in a row, you said, that's it. It's all over. We're going to be overbought. Okay, it's time to get a red week. Used to be you could go very hard with 3, knowing that, yeah, you might get a 4th. But we just came through, what was that, fucking 7, 8 green weeks in a row? Coming back there from August. 7, 8, 9 green weeks in a row, 9, 10, some shit like that. So what I've got to compare you with is looking back at last year and how I was on the front of the fucking boat screaming and hollering, we're getting a red month, we're getting a red month, we're getting a red month. And that red month didn't come until the final day of the month, October 31. October 31 had ourselves a nice little gap down, 38 points, closed down 108 points, and we wound up closing the month red, minus 0.91%. This was after having had 5 green months in a row. So, once again, all the thought, all the intention is very clean, together with the technical analysis, together with your Elliott Wave, together with every other item that you could put together other than unknown OpenAI fucking press releases and Donald Trump's fucking China shit. Those things you can't chart. So what we've got, looking at this from the 62.12, bottom over here on August 1, which I'll show you in a second, we had 267 points to the upside, minus 137.5 to the downside. 420.72 to the upside, 213.80 to the downside. Like I said, this was due to be the beginning. We get our bounce, and then we get our move down to around 63.80, 63.50, and then we get our move up into the 7,000s. 7,020, 72.10, up into that area into the beginning of the year. Instead, what we have now is we've now got 369 points to the upside off of 65.50 and gaps and gaps. And again, looking at it from a structure point of view, you can see here you've got a 1, 2, 3. You're looking at a 4 if yesterday was the bottom. So you would be anticipating to get a 5 to the upside, where there is still a 5 to the upside due as long as we don't break down below 67.38. 67.38 being your 123.6 extension from COVID to 2022 down to the 2022 lows. A standard textbook wave 3 top. Right here you've got your 100 extension coming off the May lows. The May low 57.67 up to that July high before the summer crash, July 31 and August 1. Well, I'll bring it in here to see it that we're now 100, and I'll look at it from a cleaner point of view. And again, you don't need to go and start looking at the math and the earth magnetism with what's happening with the sun today at 4:44 in the morning Eastern time. You don't need to go and do all that. What was I here for? Fuck, I fucking forgot. Oh yeah, I'm down here. We are now 142 trading sessions since we've had a minus 10% correction. That's all I'll say. So we had a minus 3.37 over here in May to that 57.67. We had a minus 3.3% move on that summer sell-off of July 31, August 1. We had a minus 3.16% dip there on that 65.50. So here we are at plus 43%. Again, 123.6 extension coming to you here off of your COVID, 67.38, would be expected to be pretty textbook. So then I bring you on to the bigger, broader, wider view of things, and this is the S&P futures for the ES and going back to the beginning of time, to when futures began trading. And as you can see here, I've got a Fibonacci extension drawn from the inception of when it began trading back in 1983, up to the dot-com highs, right down here to the 2002 lows. 161.8 times you right in there almost perfectly to COVID, like I've been sharing in the emails about the 361.8 being breached over there at 63.76. Here's your 261.8, 45.17, right there almost perfectly breached for your 2022 high before your sell-off. Well, now you're at your 423.6 extension, right up here at 68.35. And what you're looking at the moment, with 2 days left, is a possible 6th green month in a row. Zoom on out. You had 7 during Joe Biden's term, going into that 2022 high. You had 6 coming off of the January of 2018 sell-off, going into that September of 2018 high. Before that, minus 20% correction. You had 10 during Donald Trump's first year, of a year that was extremely non-volatile. You didn't even have minus 1% days during that 2017. But again, you led up there into that January 2018 high for a 9-session minus 11% move to the downside in February. Back here in 2012, you had 7 green months, not weeks, months. Come over here into 2006, and you had 7 green months in a row. Come over here off the 2009 bottom, and you had 6 green months in a row. And take it out as far back as you want to go, going back to when the dot-com really kicked off with Windows 95, you had 8. Again, over here in 96, you had 8. Back over here in 1989, you had 7. And that was after coming off of the 1987 Wall Street crash. Prior to that, you had 8 green months in a row. So getting these consecutive green months in a row is not bullish. It's not bullish, especially when you are at the trajectory of what you are pushing right now. So I leave you with it with that, but I bring it to your attention because there's a number of you who are going to be needing to make an adjustment on these trades. The 66.70, 66.65, or if you went with the 68.05, 6800, whatever the trade may be for October 31. And here's your big benefit. Your big benefit is you collected an abundance of credit. Abundance. Your second major benefit is, just as a blind mouse, where your 2 gaps, just from the last few days, are at 67.92, 67.38. You also know that November is going to be a new month. So again, when you start going into the November is, well, will it be a 7th green month in a row? That's a decision that you're going to have to decipher on your own accord. It's completely up to you. However, you've got the ability today, the 30th, with tomorrow being the 31st, which may be a little bit more difficult, to go and start shopping for different places to roll your October 31 so that you can not only receive a equal amount or very close to amount of credit so that you're not giving back too much, or even take the opportunity to start looking back into a little bit deeper to collect equal to or a little bit more credit. And again, being that we get a red day, red month all coming out on the final day of the month. Oh, you got to make a decision if that's a chance you want to take.